What's going on, everyone? I want to give you guys a quick example of a strategy that I use each and every single day. And if you guys have watched my YouTube videos before, you definitely know the strategy. It's the 20 SMA strategy. We're looking for those breaks and closes with confirmations above or below. And then we're kind of correlating that with where are the other areas of supply or demand at and how much space do we have if we actually confirm and get down. Depending on if you're an intraday swing trader where you're holding for bigger moves or you're a scalper, this strategy will definitely work out. Now, I do have to make a disclaimer that this is not a move that I'm going to sit here and say that happens every single day, okay? So if you look for this strategy, don't expect it to do what it did today. But the key point that I want you guys to walk away with is that if you have a strategy or an entry or a model or whatever it is that you want to call it, make sure that you fully trust that strategy each and every single day. Make sure that you manage your risk accordingly based on what the price action is giving you. So if you have a setup that is requiring, let's say, a bigger or a wider stop loss, it doesn't mean trade bigger size, okay? Have some common sense, size down. That way you can absorb the wiggle room and you can actually hold these trades out. Maybe it starts off as a scalp that turns into an intraday swing trade, like you're holding it 2 or 3 hours later. Today is a perfect example of a 20 SMA play that was absolutely fantastic for 100 points. Now, I'm not going to sit here and say that I took this trade for 100 points. I definitely did not. On the size that I was trading today, I managed to lock in about $331. Is it a fantastic day? Not really. Is it a good day? Absolutely. Any day you finish flat or green is a good day, or even with a small loss is a good day. But I want to show you this just to bring it to your attention, to reflect on it and show you how it would have worked if you put yourself into the trade. So notice the first 5-minute candle of today. We're looking at the NQ chart. We're looking at today's price action. Today is September the 24th. Look at the first 5-minute candle. Big spike, which was a trap. A lot of people probably tried to go long here. Again, I definitely don't recommend trading with inside that first 5-minute candle unless you're really, really experienced or you have a dedicated strategy to trading the open inside the first 4 minutes, 4.5 minutes. If you don't, definitely let the dust settle and then try to find something after that. But look at the first 5-minute candle. It was, again, a 70-point range candle. Now, this is where things get a little dicey, because a lot of people are going to look at this and they're going to say, well, based on how I trade, there's no way in hell that I'm going to take a trade with 70 points worth of risk. I agree. If you're trading a mini contract, you're trading 2 minis, you're trading, 5, 6, 7, 8 micros. Yeah, maybe you don't want to give up that amount of points. I get it. But what really is a stop loss in terms of points, right? What is it really? Because just because the number sounds crazy, like this is a 70-point candle, if I take this trade, I have to risk 70 points. It sounds crazy, but it doesn't sound too crazy if you're trading 1 micro. It doesn't sound crazy if you're trading 2 micros. It doesn't sound too crazy if you're trading 3 micros, depending on the account size that you're trading with and what prop firm, what drawdown rules you have. So don't necessarily let the number of points that you're giving up deter you from a trade that is still a very valid and a very good setup. So if you were to put your stop loss above the first opening range 5-minute candle wick, you would be risking about 70 points on this trade. If you have even a 50K account, I think that you can afford to risk probably 2 or 3 micros. But let's use the scenario where we risk 2 micros. So for every 70 points that we give up, we're going to lose about $140 per micro contract. That's about $280, $300 total loss that you're going to risk on this trade if it goes completely against you. What this is also going to do is it's going to allow you to free up a lot of time. It's going to allow you to set a bracket and essentially walk away. Either your stop loss gets hit and you lose $280, $300, or your take profit gets hit and you make $150 if you're looking for a 0.5 risk to reward, or a 1-to-1 where you're looking for you know, that $280, $300 profit. You can essentially just walk away. And if you would have done that, there was a point in time today where for, you know, about the top of the hour here, off the open 10 a.m. Eastern into 11 a.m. Eastern, where the market got a little bit choppy. It didn't really do a whole lot. I could see a lot of traders getting chopped up. One point that I want to bring up is that a lot of traders will give up $150, $300, $400 a trade, and they're risking like 10 mini or 10 points, 15 points, 12 points, right? Because you're trading 1, 2, 3 minis. And for me, I would rather de-escalate the amount of risk that I'm going to put on the table by allowing the trade to actually work out. Because again, if you notice on my chart, there's a lot of moving averages that I have on my screen here. I kind of cover this inside of my community, but there's a lot of moving averages on top of us. It's telling me that there's a lot of supply. So until price action starts reclaiming a lot of this supply, you're not really in any danger that the market's just going to shoot up against you. It's got to go through these levels of resistance before it can go any higher. And each one of these levels of resistance is going to act as a ceiling where potentially if it does bounce, it's a perfect opportunity to continue to get short or add into size or start a new trade or whatever. So in this particular case, about 5 minutes, 10 minutes off the open, you would have been entering into this trade. And realistically, you never really went into too much drawdown. Okay, so you were giving up 70 points here on this initial range because we're going to use this initial 5-minute candle high as our stop. You could have essentially, once we started to push down here and started to really consolidate, you could have moved your stop loss down in half at least, giving yourself a 70-point risk down to a 35-point risk, down to a 40-point risk. Kind of tighten that up a little bit. And if you look at where we just ended up right now, and this is the reason why I wanted to make this video, is because about 2.5 hours after the market is open, we have hit a full 1-to-1. Now, meaning if you were giving up 70 points for the initial, you would have made 70 points plus. This move has gone down over 100 points. Now, again, this does not happen each and every single day. So the next 20 SMA trade that you get doesn't mean that it's going to do this, guys. Okay, I've seen it sometimes where you're risking 35, 40 points and it goes up in your favor 20 points and then comes all the way back down, stops you out at break even or stops you out for the full 20-point loss. I've seen it happen a lot. So you as a trader need to build on it. Are you that trader that's willing to risk this much and let it play out? You might catch these great trades once every week, once every 2 weeks, once a month, twice a month, 3 times a month, and they're really, really good days to have. You can also build into your strategy where if you're trading multiple contracts, let's say you're trading 3 or 4 micros, maybe at 30 points, 40 points, 25 points in the profit, you're scaling off half and then you're moving stop loss to break even, or just, you know, cutting it down from 70 points. Let's cut it in half to 35 points and you're letting it run. You're letting it run till at least a full 1-to-1, and then maybe that's where you scale out some more. So just wanted to bring this to your guys' attention because I did take part in this trade. I was in this trade for quite some time, and I managed to walk away with about $331 or some shit like that. Let's see the exact price. $331, and then I took another scalp, and it was like a $40 trade. So I'm finishing with $377.40. But the first trade that I took was this 20 SMA trade. And this trade literally got down below the linear regression. It kind of put in this new low. It retested the linear regression, consolidated, like I said, for about 45 minutes. This is brutal. This is brutal because a lot of traders, they want to go back long. A lot of traders want to go back short, and then they get stopped out long, and then it goes back short. So they go short, and then it goes back long. So this is brutal, but you have to understand this is nothing. This is nothing. This is not doing anything. Even though it's going a little up, a little down, a little up, a little down, you're in drawdown, obviously. The only thing that's going to make this scary is how much size you're trading. That's what's going to make it scary. But realistically, nothing was scary about this trade popping back up to the upside. It never reclaimed the 20 SMA. Okay, never reclaimed the 20 SMA. Tested it once, tested it twice. Both times got rejected. Both times we're telling you more confluence, more, you know, look at the double bottom here, more add to your size, more continue to hold this trade, more you're going to make some money on this trade. Just sit on your behind, stay calm, don't let all the FOMO get to you, and you're going to make some cash. Hope you guys enjoyed this video. Make sure to hit the thumbs up on this button, guys. If you guys need any evaluations or you guys maybe want to try this out, check the description down below. I've got all my affiliate links down there. I would highly appreciate it if you guys used them. If you enjoyed this video, my code is DAnthony if you want to use them with those firms that I'm affiliated with. And I'll see all of you guys on the next video.